Did you know accounting has existed for more than 4,000 years? From ancient kingdoms to modern multinational companies, accounting has continuously evolved with society and business. In today's video, we will learn history and development of accounting, contribution of Luca Pacioli, evolution of accounting systems and why accounting is called a social science. Accounting began thousands of years ago. Around 4000 BC, Egyptians used accounting methods to manage their treasuries and prepare daily financial reports for kings. Babylonians used accounting to identify losses caused by fraud and inefficiency. In Greece, accounting was used to maintain records of government receipts and payments. Romans maintained books called memorandum or daybooks to record financial transactions. China also used advanced government accounting systems as early as 2000 BC. In India, accounting practices can be traced back to Kautilya, also known as Chanakya, the minister of Chandragupta Maurya. In his famous book Arthashastra, he explained how accounting records should be maintained systematically. One of the most important personalities in accounting history is Luca Pacioli. In 1494, he published a book called Summa de Arithmetica, Geometria, Proportioni et Proporzionalità. This book introduced the double-entry bookkeeping system. Luca Pacioli explained the concepts of debit-credit journal ledger. He stated an important rule: for every debit, there must be an equal credit. Because of his contribution, Luca Pacioli is known as the father of accounting. The word debit comes from the Italian word debito, meaning owed by the proprietor. The word credit comes from the Italian word credito, meaning trust or belief. These concepts became the foundation of modern accounting systems. In the earliest stage, accounting mainly focused on stewardship. Rich business owners appointed stewards to manage their wealth and properties. The duty of the steward was to maintain proper accounts and periodically report financial details to the owner. This system is known as stewardship accounting. With the growth of joint stock companies, accounting evolved into financial accounting. Ownership and management became separate. As a result, investors, shareholders, banks, and governments needed reliable financial information. Financial statements like profit and loss account balance sheet became legally important for reporting business performance. As the next stage, accounting expanded further into management accounting. Here, accounting information is used internally by management for planning, budgeting, cost control. Decision-making, management accounting helps improve business efficiency and support strategic decisions. In the modern world, businesses are also responsible for society. Industries may create social costs like pollution, resource depletion, environmental damage. At the same time, businesses generate social benefits such as employment opportunities, better products, economic development. Therefore, accounting now also measures social costs, social benefits, corporate social responsibility activities. This concept is called social responsibility accounting. Accounting is called a social science because it serves society as a whole. It provides useful information to investors, employees, governments, customers, and the public. Accounting supports economic growth, transparency, and informed decision-making. As society changes, accounting systems also continue to evolve. So let's quickly revise today's topic. Origin of Accounting in Ancient Civilizations. Contribution of Luca Pacioli. Double Entry Bookkeeping System. Stewardship Accounting. Financial Accounting Management. Accounting Social Responsibility Accounting. Accounting as a social science accounting has evolved from simple record keeping into a powerful system that supports businesses and society. If you want to master accounting concepts step by step with practical examples, subscribe to Krishna Prasad Accounting Academy. Like, share, and comment your doubts below. See you in the next video.